Hi everyone, welcome to the 103rd episode of the Timing Research Show for September 12th, 2016. My name is David Kosmeter, I'm the creator of Timing Research, and today we will be talking about the 155th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Matt Buckley back to host this episode. I'm going to go ahead and turn it over to him.
Thanks, David. Appreciate it. Welcome aboard, ladies and gentlemen. Looks like it's going to be an extremely boring session today because we have absolutely nothing to talk about. I mean, wow. Between Friday morning and right now, it just seems like either the world's coming apart or coming together. It depends on your point of view. And we have, as David always does, he gets a good group of 500-pound heads together to discuss what we see is going to be happen down the road here. Very tactically, short term for the week. Lance Ippolito from Alpha Shark is joining us. Good to work with you again, Lance. Jason Pearce from Smart Money Investor. Anka Metcalf from Trade Out Loud. Good to see you again, Anka, and again, Kurt. You and I have Kurt Capra from T3 Live. I've worked with as well. So really good group of folks. Let's keep this order all day today, folks. Lance, Jason, Anka, and Kurt. So Lance, starting with you, why don't you give us a good executive summary of your background, how you got to where you are today, and what you do at Alpha Shark.
Basically, my background is a CTA, so I managed a commodities fund here in the Florida area. And then really after a couple years wanted to basically manage my own money and not have to worry about fund performance, the marketing, sales, all that clutter that comes with that. So I was trading on my own and got a call from Andrew at Alpha Shark, and really ever since then I've been a moderator over there. So I host during the live trading day. I'll host for about an hour, and then I'll do a post-market analysis wrap-up there at Alpha Shark, where we mostly focus on unusual option activity. We have an option scanner picking out all sizable or unusual option trades going out throughout the day. And mostly I'll trade index futures, some crude oil and gold futures in there as well in the trading day, to kind of mix it up between option traders and futures traders, all in the live trading room.
Okay, great. And you're over in Tampa, right? Or where are you in Florida?
Just north of Tampa.
That's right.
Like Lutz area, kind of not downtown, kind of out in the country area of Tampa. Where we have lakes and some land.
Got it. So you got a still out in the backyard is what you're saying? All right, Jason, how about yourself, man? A little bio, what's your background, and then what do you do for a Smart Money Investor?
Sure. Well, you know what? I was doomed from the start because my dad was a trader and then started a brokerage firm, and I grew up at almost to the mile, the halfway point between Detroit and Chicago. So depending on whether we were talking about football or hockey, you would find out if I lived next to Detroit or next to Chicago. So anyways, I've been in the business for 25 years, ran a brokerage firm, managed a little bit of money, doing some trading and system development, writing newsletters, etc. And I kind of joined up with Smart Money Investor, developing some easier trading systems, some more simple stuff for the average guy to get involved in, instead of worrying about all the high frequency stuff and all the pros that they seem to think they can't beat. I showed them a simple way to do it. And I'm in Florida too. We all seem to come down here. I'm up in the Panhandle, living on the Gulf of Mexico, living the dream.
That's awesome. Good. Panhandle. I went through flight school up in Pensacola, so I'm a big love the Panhandle, the beautiful beaches, and just the nicest people in the world. Awesome. That's beautiful. Anka, how about yourself?
Well, I'm getting ready to move to Florida.
There you go.
Welcome.
Where are you moving to?
Okay, moving to West Palm Beach area.
Yeah, West Palm.
Yeah, hopefully this winter we'll be there. Okay, so I'll see you guys down there. Okay, so I'm in Detroit right now. So we have Detroit, we have a little bit of Midwest, and we have Florida here. So good. Okay, so I've been a professional independent trader focused on equities and futures for the last 13 years. I do have a background of investment banking, and I have been in investment banking for the last, prior to being on my own for the last 13 years. So I have 10 years plus of investment banking, and I have worked in Europe. I'm the founder and CEO of TradeOutLoud.com, which is a trading education company that is focused on trading training individuals that desire to embrace the day trading and swing trading career. And I teach equities, futures, and currencies. And I also have a couple of other programs. I run managed accounts program, so we do have a hedge fund that we currently manage. We have a really good track record with that. With this really crazy market that we've had lately. And other than that, I'm also the designer of a proprietary trading system. And what that means is that I took a system that we used to use as institutions, and I have adapted it for the retail trader. And the system is pretty easy. It's based on price support resistance with specific trigger times, with chart correlation, a strict set of trading rules. And to break it down more easily, I have created a 10-point scoring system. So this would enable the trader to identify a trade more easily and to be on the right side of the trade. So to have a maximum gain for their risk, basically.
Wow, that's you're definitely not coming to West Palm Beach to retire, it sounds like.
Hopefully.
Jeez. Okay, Kurt, how about yourself, my friend?
Hey, thanks for having me. Good to be back with you guys. I am with T3 Live, and I had a similar kind of upbringing as Jason said, where my father was involved with the markets. So from a young age, I kind of didn't have that initial interest, didn't really know what it was all about. I was just looking at his screen, seeing these red and green bars, thinking it's some kind of weird video game that I didn't understand at the time. But then, finally started understanding more about economics and the markets, etc. So at that point, I was like, hey, can make some money doing this, and got involved. Started off with trading the futures, the index futures, did a little bit there, did some ETF trading as well, and now mostly focused on Forex. But the way I look at things really allows me to use the method no matter what it is. So whether you're looking at equities, futures, as I said, Forex, it really doesn't matter. So that's what I'm focused on here now. And with T3 Live, we pretty much have something for everyone, whatever your interest area is.
Awesome, good. And finally, my folks, folks, my name is Matthew Buckley. You can call me Whiz going forward. That's a 10-drink minimum about how I earned that call sign, but I flew the F-18 Hornet for the Navy for about 15 years. Matter of fact, 15 years ago yesterday, was supposed to be my first flight as a pilot for American Airlines out of Dallas-Fort Worth. And I was getting ready to go on my first trip. I saw the attacks, and I raced out to the Naval Air Station where I flew for the reserves. I flew Hornets for the reserves, and I ended up going from potentially flying in an airliner that day to shooting one down. To maybe even shooting down a squadron mate, since most of the guys in my reserve squadron flew for American Airlines. Imagine that. So that kind of left me high and dry with the tens of thousands of other pilots that got immediately laid off after 9/11. So yesterday was it's a very bittersweet day for me. So to see 4 of those Miami Dolphins take a knee. And it was a great picture yesterday. Here's a U.S. Marine holding part of the big flag, and behind him are 4 guys taking a knee. Disrespect, you guys, I got it. This U.S. Marine was great picture. So I taught myself how to trade equity options when I was a young pilot in the Navy. Applied everything I was learning flying fighters. Having a strategy, being disciplined, knowing when to eject out of a bad situation before it got any worse. And eventually, I ended up after losing that airline job, I ended up really throwing myself into trading, and I popped up on the radar of one of the largest volatility arbitrage firms in the world, Peak 6 Investments in Chicago. So they brought me up. It was literally like a scene out of Trading Places. I mean, who the hell am I? And two rich white people betting $1 on me. So I ended up becoming the managing director of strategy there, and I also ended up being the founder and CEO of the Options News Network, ONN.TV, where we shoot on the floor of the CBO and the CBOT and provide some great content to everybody. And then I decided that Chicago winters were best left for suckers other than me, since I'm a Navy guy and I need a beach. And I moved down to here, beautiful Boca Raton, Florida, where I started Top Gun Options about 6 years ago, where we do live trading throughout the week, and we can talk about that later. I'd rather talk about the market. So, Lance, let's start with you, man. This week, you obviously can include the end of last week because that's favors in what's going to happen this week. What do you think is going to happen this week, Lance? Where are we going to close on Friday? Higher or lower than we opened this morning? And let everybody know your confidence, how you feel.
So I was looking back at last September, and that Monday through Thursday of September last year was very bullish, specifically the NASDAQ. A couple of things I noticed is September quad witching approaching, and then next week FOMC. So kind of putting all the factors together. I believe it's for monthly expiration. 12 out of the last 14, I think 14 or 13 monthly expiration weeks have been bullish for the market. So therefore, call me a ultra bull. I think we head higher, and I feel like every time I come on, I say higher, higher, higher. But this week, today we actually saw some nice buying with some internals backing it up. Really looking forward to Tuesday morning, see some confirmation if this buying is going to last. But I'm leaning towards we move higher this week in the market.
What's your delta? What's your level of confidence there?
Call me 85% confident we move higher.
All right, I'm writing that one down, man.
Yeah.
That's
next week should be fun too, and Friday could be a little shaky, but just going by, hey, Monday will move higher or lower. I think we move higher.
Okay, very interesting, Jason. How about yourself?
Well, initially, I think we all know the stats and why we should be bearish. I mean, number one, we just had the quietest period in years or decades, depending on how you measure it. I mean, Bollinger Band's narrowest in 20 years, but if you look at the 40-day range percentage-wise of the Dow, is like, I read it was the tightest in 100 years. And so we have a big volatility breakout to the downside, breaks your 50-day moving average. Seasonally, we all know September is the only month since 1929 where your average return is negative. So all these reasons the world's going to fall apart, right? However, I'm going to say, from a contrarian point of view, we gapped down this morning, filled that gap, called the gap and fill. Usually it's a good play on a reversal. Looks similar to what we saw in Brexit. And the pivot point I'm kind of watching on there, Matthew, or Whiz, I guess I should say. Last year's all-time high was about 2135 on the S&P cash. So we cleared it July 11th, stayed above it all the way till Friday and closed back below it. So that's probably going to signal a false breakout. But I maintain that since we filled the gap, if we can get back above that August close, I'm going to have to be a bull again. So I'd say I'm bullish, but conditionally bullish, if that makes sense.
Okay, so you think we close higher on the week on Friday? What's your level of confidence?
Well, from all my experience and research and seeing both sides, I'm going to put my confidence level at a high 51%. I'm hedging myself. I'm more of a spread trader,
Okay, Mrs. Clinton, thanks. Mr. Trump, your answer, please. Wow, excellent, man. That was well done. Well done, Jason.
Nice.
Jason for Senate. Anka, how are you feeling?
Don't wish that on me.
Yeah, exactly. I wouldn't wish that on my worst enemy. Anka, how you feeling for the week?
All right, I have to agree with Lance 100%. He took the words right out of my mouth. Like, I gotta tell you, our analysis is like 100% right on the money.
Wow.
I see a strong support level here at 2120 in the S&P, from which we bounced today, and that was the prior resistance that formed support for today. And if you see the flurry, if you look at the charts, you can see the flurry down right into that 2120 area that was bought, was sent back, and right now we are just erasing the prior support that was set on August the 2nd, which makes me bullish. So I would say I'm about 80-85% bullish for the week. Again, I am cautious, and to be very honest, I did not participate in today's rally. I did not take one trade today because we had an extreme sell on Friday, and that made me a little uncomfortable shorting today, and also made me a little bit uncomfortable buying today. So I was sitting on the sidelines and watching to see what happens. Obviously, for me right now, this is the test area. 2150 in the S&P right now is that line in the sand, which for me, if it breaks higher, we will continue higher. And if this is going to be a ceiling for this price, then we might get lower, but I really don't see it. The fact that we got this strong buy off the open today, I am not really sure if we're going to continue lower. So I'm bullish. And again, you know, like Lance said, every single time I come on this show, I am very bullish. Even on a pullback, I swear, I don't know what's going on. But like, I seem to be very bullish. And I think that we have to take into consideration FOMC for next week, but let's leave that for next week. The big key this week is going to be that expiration on Friday, and that's going to be a big pinpointing area for stocks and for ETFs. But I think that we're probably going to go towards 2170 in my point of view. So yes, I am bullish, 80-85% bullish.
Well, it seems like probably any time you've come on the show in the past couple of years and said you're bullish, you end up right, unless it's been in January when oil imploded or the Brexit. So I think that's a high delta choice there. So Kurt, I got 3 up arrows, man. Where are you coming from for the week?
You know, I'm going to have to agree with everybody else too. As much as I'd like to add some kind of variety here, but let me switch and show my screen. All right, so you guys should be able to see that. You know, I mean, this is the S&P cash, and like Anka said, you know, we're down into this support level, pulling back on top of where we broke out from, going back to a couple months ago. So we're getting a bounce from there. The question now, and this is where, you know, it's kind of interesting. We get this big acceleration bar on Friday, and everybody starts saying, you know, the world is falling apart. But it happens so fast. You know, if you look at an hourly, it happens so fast. This move down really left absolutely no resistance for this to stall at. You know, so as this is coming back up, it's like, where am I going to short it? Where did it stall on the way down that offers me a good spot? And you really don't have anything until you come back to the breakdown level on the daily chart. So at that point, you know, okay, I could short it there, but now I've retraced 80% of Friday's candle, which doesn't look so bearish anymore. So there's a lot of uncertainty based on daily and hourly signals. But if you try and zoom out a little, you know, the weekly gives a little more perspective. And again, you're just sitting right on top of support, which is a pretty key level. So it's not that this candle that we got yesterday or Friday isn't bearish, but it's got to do a lot more than just sell off one day to really start shifting the ideas or psychology of everyone. And furthermore, if you look at a lot of sectors have been moving down. So the sell-off on Friday was kind of a catalyst for a lot of other sectors that are now just into support and ready to bounce. So, you know, again, I kind of got to go with everybody else here and say bullish.
That's all right. So let me put that up arrow here. What's your confidence there, Kurt?
I'm going to go 100%. I mean, the charts tell me to do that until otherwise I've got no reason to think not.
Hey, man, if you're going to squeeze the trigger on a missile or a trade, you better be pretty damn sure of it. So I appreciate your enthusiasm and your mindset. The best part about being a host on the show is going last and saying you're all completely wrong. So that's the awesome part. I think this is, so yeah, the rip your face off implosion on Friday on one of the Fed lieutenants words, it cracks me up because I think we had 3 of them talk today, and we've gotten, Dow's up $1.50 or whatever it is. I don't know if there's going to be follow. This isn't the Brexit. This isn't one and done, and we just bounce back up. I think we're going to end up doing a nice recovery here. Jason, I think maybe you said it. We'll see if there's any follow through Tuesday morning. But I don't see any rip your face off rally in the other direction with the FOMC meeting. These guys enter their little I've got a secret period in a couple days here where they're not allowed to talk about anything. So, what are we going to do for 4 days, 5 days going into the in the Fed meeting? Just bid the market higher? I don't know. I don't believe we're going to finish higher than where we are. I think we give some of this back for the past couple weeks or the past months, and I've shown my members this. When you have one of these just pops on a Monday, it's usually a little follow through on Tuesday, kind of flat Wednesday, down Thursday, and then we sell on Friday. And then my next question, I'm not going to answer right now. I'll let you guys start so I can tell you you're all wrong again. There's economic events throughout the week that'll help us out. So I am going with 100% delta on that one as well. So there you go, Kurt. We're on the pistols at dawn. So Lance, based on everything you just heard, what are you looking at that's on the flight schedule for the week that made you come up with your 85% higher thesis? What's on your radar?
Mostly for options, the quad witching monthly option expiration. At least until Thursday, I don't think we'll see anything too fishy going on in this market. I agree with your statement. I don't think we're just going to have a blowout rally this whole week where the S&P is going to jump, 80 points to the upside. I think it might be one of those days where, like a couple weeks ago, it's where we kind of just grind slowly higher in the market. Friday could be a little iffy because of quad witching. We could see some funds start to shake up the market a little bit. But just again, I think there's the that large investor conference, not Seeking Alpha. There's another one approaching this week where I think that could be, as crazy as it sounds, bullish for the market. Just people liking. And fund managers talk about the market. Mm-hmm. And really just with the Fed being quiet, with the lack of Fed speakers, I don't know too much to shock the market just yet. Mm-hmm. To make it sell off, I think something major needs to happen for us to really have some follow-through selling to the downside.
Yeah, well, I'll agree with that. I don't think there's anything. I mean, this week on the radar that's going to give us a Friday, but I just don't think that, to your point, there's anything on the radar to give us an inverse Friday to the upside. Especially, I mean, Jamie Dimon, I was just watching on Comedy Central here, CNBC, that he's calling for 25 points. He's like, it's chump change. I can find that in my couch. So not that Janet listens to him about anything, but I think you're right. But I don't think there's anything macro wise that can take us to the upside on an elevator. So okay, Jason.
Well, I'm just going to have to agree with everybody. I mean, the big catalyst, of course, is going to be the reaction to the FOMC meeting and the volatility breakout to the downside, triggered stops, etc. Then we get this gap and fill today going back up. So anybody who is going to sell is already out of the market. You're not really seeing a whole lot of follow through, and I think everybody's waiting to decide, do you want to be short or do you need to get back and buy back the things that got knocked out on Friday? So, yeah, it's going to be painfully slow. It's almost like Friday was a one-off. We had August was nothing, dead in the water. big break on Friday, and now we might be resigned to a bit of a trading range, again, with a slightly upward bullish bias maybe for the next, well, a little over a week. I guess it's going to be a week from Wednesday before we actually have the announcement.
Do you, I wanted to that, Jason. Do you think do we sell off a little going into the Fed meeting, and then we get this kind of relief rally on the news? Because I personally think that this, everybody and their mother, mine included, we're sitting here going, just get the damn thing over with, man, so we can all get back to work and making money. So it's almost like I think it's priced in a little bit, to be honest with you. I think this was the temper tantrum, to be honest with you. It was like the Friday was the, holy crap, they're going to do it, and then maybe in next week we see everybody shut up and let's keep smoking the hopium until December. What do you think?
Yeah, I'd have to agree with that. I mean, what are they going to do if they do raise a quarter of a point? If the whole world's going to come unglued over 1/4 of 1 point, still ultra low interest rates, then maybe I don't want to be in the game after all.
True.
But yeah, it seems like it's the anticipation that's going to get the bigger reaction. It's the old saying, buy the rumor, sell the fact. So.
Correct. I am a big believer in that, and getting my portfolio set up that way. Anka, what's on your radar this week that made you say Lance copied everything from your playbook?
No, I think it was the other way around, or maybe. Okay, we share the same office. Okay.
There we go. That's what it is.
Okay, the thing is that, I have to agree with you guys. I think that this big red flush bar, I think it kind of like priced in everything. I don't think that quarter of a point is really going to matter that much into the market, and I think the market is just reacting. Like you said, Whiz, it's just a tantrum. It's going up, it's going down, it's becoming moody, and I think overall we might go higher. And I have to take into consideration that, usually the month of September is usually a slow month, and that's, we're really trying to wait for earnings season to start to see the big reaction in the market. I don't think that the FOMC meeting is going to have that big of an impact with that 1/4%. We might see that fleecing going on then. In terms of levels, we've been talking about the S&P, and this is what I look at when I look at the market. Like I said, this 2150 area is going to be key area for me here. Like if it breaks above, I'm going to look for more upside going into FOMC, and I don't think we're going to go higher. We're going to break above the month of August highs into next week, especially into FOMC. But I think FOMC is going to be catalyst enough. So if there should be no rate hike, although I said that I don't think that's the issue here with that 1/4 of a point, I think we might be ready for a breakout higher, and that's why I'm bullish. And I agree with Kurt. When you're looking at the chart, you have to read what the chart is telling you, and so far it's telling you to be bullish. We're in a very strong uptrend on all the time frames, and believe it or not, when I've been trying to short some things in the market, I didn't really do so well. So that's why I'm leaning towards being bullish. So going into FOMC, I think probably we're not going to take out this high right here of let's say 2180, but I think we might be able probably to move towards that area. So I'm bullish on this one.
Okay, and Kurt.
Pretty much FOMC's got everybody's attention. That all being said, at the end of the day, I don't think it really matters. Whatever they decide to do, it'll provide some intraday volatility. It'll give people something to talk about. But at the end of the day, it's not going to, in all likelihood, have much of an impact on the chart. You can't look at a daily chart and tell me where the last FOMC announcement was unless you know the date and you go back. Right? You're not going to look at the chart and just say point to a bar and say that's when the FOMC announcement happened. So the bottom line is, from an intraday point of view, yes, it matters. You have to be aware of it, but longer term, it's not that big a deal. And you can go back and look over time. I mean, it's not like the FOMC event has changed the trend drastically. At I'm not going to say at any point in time, but the large majority of the time, it just doesn't play that big a role overall.
It's interesting, Kurt. I was trying to find a similar event as to this September, December Fed meetings, and can you guess the interest rate increase? The only time in a similar, post 2008, the world completely changed. The government got involved in capitalism, and we never looked back, and we're all smoking opium, and everything's great. The last time a Fed action or announcement, in my opinion, created or leading up to a couple of times the event could have happened was the taper. I remember May, March, one of those M months. It was the first meeting where Bernanke was really believed to be getting ready to taper the 85 billion. I always catch my members on that. Well, no, they're members now. Folks who before they joined TGM, I show them that chart of the VIX in May of 2013, and it goes from 12 to 24, doubles. And I say, hey, what was the market doing then? And of course, 99% of the people say what? Market was going down, obviously. I'm like, no, it wasn't. It was chopping. You couldn't fight $85 billion a month from the Fed. It didn't matter if there was uncertainty around whether Bernanke was going to start to taper, but the market kind of didn't care. It was still drifting higher, even though the VIX doubled. So that's a great Obama teachable moment there of a Fed meeting and then as soon as Bernanke came to the mic and said, not this time, maybe next time, from 24 back down to 12 on the VIX. So that's about the only Fed event in our post-tsunami history that I think is you can equate to. But the market was drifting higher, like all you guys are saying. Hey, man, low interest rate, when interest rates are low, stocks will grow. When interest rates are high, stocks will die. So trust me, I'm a cautious bull. I got one hand on the ejection seat, but it is really kind of a hold your nose market where you're like, I know we shouldn't be up here, but we are, so let's get higher. For me, for the week, there aren't massive macroeconomic things. There's some China data that comes out tonight, especially industrial production. The only reason I point that out is sometimes when China data come out while we're all tucked away, snug as a bug, and we wake up and the futures are down, a lot of folks who are retail traders who are on this webinar right now scratch their head and go, whoa, why the hell are the futures down? Sometimes bad news out of China can move our market, especially if it's really bad. But in this Fed atmosphere, charged atmosphere, I think people might shrug on that. I talked about the 3 other Fed lieutenants that are talking, but they really didn't do anything to the market. And then Thursday, Friday, we get core retail sales and regular retail sales, and a Philly Fed, and the Empire State Fed, and some other stuff too. What was preliminary University of Michigan? Easy for me to say. Consumer sentiment is on Friday. So there are some very, very tactical small stuff, but I think we'd all agree that those are all kind of gnats buzzing around the market the week with nobody really caring about any of that stuff. Normal week we might talk about that, but I think you guys are all right. It's obviously once they go into their quiet period, we might as well all put our boots on the desk. And Anka, I love the what you actually did today, which was nothing. It's very, and I hope every retail trader on here listened to what she said, because it was very, very, she says if, some people might consider this, well, she did something wrong. She made the best trade possible. I haven't even put one on today. I'm kind of sitting on my hands like you are. That's one of my favorite lines from War Games, that 1980s movie. Sometimes the only winning trade is not to trade. So if you're going to force that square peg into a round hole, and this thing completely does whatever it does by Friday, you're going to wish you sat on your hands. So that's a very good trade, ladies and gentlemen. So listen to what she said. All right, top of the order again, Lance. As we get sort of in the home stretch here, I'm going to put everybody on the spot because I'm going to ask you for a nice, juicy trade for the week. Either you put one on you're looking at, or one that you would love to put on. What would be a good trade for you for this week? What do you like?
I could tell you one trade I did put on this morning, literally right after the open, and it kind of plays with the whole China issue that you were talking about with some of these China names can move the market. Like Friday, and specifically a lot of the China names got hit pretty hard as well. But a trade I put on literally this morning was BABA, and I put on, let me pull it up here. Let's share this. I put on the BABA next week, so the September 23 expiration 102 call options. Why I was looking at BABA specifically was BABA right around that 100 mark has been like a magnet, I feel like. BABA broke it to the upside after positive earnings quarter. And what I'm looking for is, actually saw that today on the BABA chart. When I was looking at it this morning around like 98.5, BABA broke 100 to the upside, shattered that resistance, and basically I'm looking for follow through in BABA to the upside. China news can add to that as well, and also too, just some of these momentum names going, looking back, tend to run up going into monthly expiration. And I've noticed, just from my trading, the following week after monthly expiration has been pretty bullish. So I got a hold of some BABA calls to carry the ride up. Nothing large in size, but if everything could go smooth, China news, quadruple witching, this expiration, and then some follow through into the following week along with the Fed, it's in my risk versus reward strategy. And I think there could be some upside in BABA, and that's why I got long calls.
I like it, man. That sounds good, Lance. I actually was, as you were talking through that, I was kind of looking on my Options House platform. I like it. Jason.
Well, I'm not as sophisticated as all you option gurus, so I'm doing something real straight ahead, simple.
Smartest guy in the room.
Well, furthermore, with my commodities background, I always gravitate toward that. And one stock I've always followed is Cliffs Natural Resources. It's highly correlated to some of the commodity indices. I wish I had created the chart to show you, but if you overlay Cliffs with, say, the Goldman Sachs index or a more broad base, you're going to find a strong correlation there. So what I know cyclically is we ended the longest commodity bear market, and I look at 115 years worth of history. It lasted 4 3/4 years, bottomed in January of this year. So we're only just, I mean, this isn't a bull, this is a calf. We're only 9 months into the new commodity bull market, I think. I'm expecting it the last couple of years. So the metric that worked over the last year or so is every time Cliffs bounced to the 100-day moving average, started to roll over it, short it. It was money in the bank. Well, that kind of changed back in January. We finally broke it, and 2 times now we've had pullbacks to the 100-day moving average. Starts the bounce, you want to buy it. So as it turns out today, we poked just below that 100-day moving average. Furthermore, on the pullback, we're down about 37% from the most recent high. In the last couple of bull markets, look for 38, 40% pullbacks off the highs and buy it. So it's all coming together. If we start the bounce after poking below the 100-day moving average, I'm a buyer. The last peak right at the end of July was around just below $8.50. So I'd expect if this is another leg up, we're probably going to go to say 11, 11.5. So if nothing else, it's a great risk reward ratio. You can get a setup here, go in, risk 50 cents, potentially make, what is that, about $5, $6 off of it. So even if I'm wrong, if I can get a risk reward ratio like that often enough, I only got to be right once in a while just to make a net profit. So, risk reward is everything. and that's it. No option thing. Sorry, I'll leave that to Lance and the smarter guys.
That's a good point, though. I like the risk to reward and how you're mentally thinking through the math. Looks like a decent trade as well. Anka, what's on your radar for the week? What are you looking at as a nice trade?
Okay, I'm with Jason on this one. I'm not that sophisticated with options like
How
you
does
guys.
everybody on this webinar work together except me? Did I not get the email? Are you guys like all one trading team? Jeez.
There was like no memo.
No, I didn't get the email. I changed my email address.
Okay, I do have one trade that caught my attention scanning throughout this weekend, and to be very honest, I've done a little scanning, and the thing is that energy stocks continue to be strong, and financials are still holding up pretty well. I mean, they haven't pulled in on Friday that much, and there's one stock that basically this energy stock, it's APA. Did not pull back, and it's really trying to eat through the weekly and monthly resistance, and it's trying to break through the $60 area, and it looks really, really strong. I've done some projections on it, and it does have room to continue higher, and actually has a really nice void to about like $66 and change. So it does have a lot of room. I love the consolidation that it has intraday and a pretty narrow range. So I would start with the position. I would actually start with half of the position here, a little over $60, or even aggressively $59.80 for the entry with a stop below $58. Again, half the position. And on a break of this resistance over $60 on the first pullback that it will probably make, I would look on the 15-minute chart or the hourly chart and add the other half the position back in for further targets. I still think it has a lot of upside, although it looks a little extended on the daily chart, but there's a reason why it's holding that area so strong. There are no sellers whatsoever. Friday didn't bring a lot of selling, and they're holding on to this position. Now, are they holding it until Wednesday? We have oil numbers that are coming in. You know, I don't know, but this is on my radar. This is all I'm watching for today and probably into tomorrow. And there's another one, EOG, that is actually pulling back, and EOG has also, this is a little bonus one, that is pulling back right into this prior resistance area at $92. So this is a very, very interesting formation for me.
Hey, Anka, I couldn't, it might just be my political science major, I couldn't see your screen. Can you try and share your screen again just to show us? It might have just been me, though.
Okay, hold on a sec. How do I do that?
Up in the upper left, when you move your mouse over, there's a little like a green, the second icon down is like a green arrow that says screen share.
All right. Okay, just one sec, bear with me.
Yeah, no worries.
Okay. All right, let me know if you guys can see it.
There we go, we got it.
Awesome. Okay, so this is what I'm looking at. I'm looking at this monthly chart that is really getting ready to pop over this 5960, 5975 area, and then when I move to the weekly chart, it becomes more clearer. So it's trying to eat through this whole resistance area up. It has a really nice void, so you don't see anything that is going to interrupt its uptrend. And the fact that it gapped up on September the 7th, and it tried to erase the daily highs right here, and it's holding on to this area very, very tightly. Now, when you move to the hourly chart, you can see that this pullback right here was very shallow. So on Friday, there weren't a lot of sellers. So buyers are still very much holding on to shares of APA, and I think APA is going higher. Now, I don't have the projections done on this one, but like I said, it has room to run all the way at about $60 $66.80. So that would be a great risk to reward. And to recap everything, I'm going to look, and this is my 15-minute chart right here, I'm going to look for half of the position to buy over this 59.80 area with a stop below 58. And we're going to see how that plays out on the first breakout.
Great, that's awesome. Yep, saw all the charts and it explains perfectly what you were talking about. Okay, Kurt.
All right, so the one I'm looking at, I actually already have a position in it. It's on the U.S. dollar yen, and I'm looking for this to take a pretty good hit. I'll bring up the chart here.
Oops, sorry.
All right, so there you go. So here, this is actually where I shorted it on this break lower. And it actually coincided with Yellen's comments coming out of the Jackson Hole meetings, kind of lined up that way. And a lot of times you'll see, as I was talking about earlier, news basically just follows the trends. So anyway, you know, here, if you want to look at it kind of like a head and shoulders, you had this left side shoulder form, then it popped up, came back in, deep retracement, lower high, and then that's where you know, I took the short on this breakdown under that support. And you can see that once it broke down, it accelerated, and of course you could say in part because of the comments, but also, again, going back to what I said earlier, where will buyers look to step up? I mean, you didn't have anything until down here. So that's the position I initiated, and like I said, I still have some of it open because from a longer term point of view, you know, if I go to the daily, you can see here this big long-term downtrend, and it's just been hanging down here right around this 100 level. So my bias, my expectation is that in time, before the end of this year, we're going to be breaking this level of 100, and I'm thinking we could go low 90s on the U.S. dollar yen. So in other words, I'm looking for the dollar to kind of fall apart here against the yen. And even on the weekly chart, right, you can see here, big head and shoulders type top from the highs all the way down into this support now where it's just been chopping around. You know, you've had these reactions, but none of them have been able to mount any real move to the upside to threaten resistance. So as I said, I'm looking for this to continue lower, as the low 90s, somewhere down in this area here, is what I am kind of targeting by the end of the year. So that's the trade I have on, and you know, if it breaks under this support, that'd be a spot to look at getting involved as well. So that's what I'm doing here.
Looks good, Kurt. I literally, as some of you guys were talking away there, I just sent out a text alert. Hello. So you get old, you move the book, and you start to lose your mind. I sent out a bear call spread on the S&P 500, the 2165. Why don't you trade SPY, Whiz? I'm not a tax accountant. I'm not your attorney. You can figure out why I trade SPX and not SPY on your own, and you can. I'll split the difference of what you retain and don't give to Uncle Sammy. But I'm looking at the 2165, 2170. It's got using current at the money volatility, it's got about a 72%-ish probability of making some money. I think we might get that, as I said, this Tuesday-ish follow through on the from today, but nothing massive. What was it? It wasn't last week. That was Labor Day. 2 weeks ago, we had one of these Monday $1.50 rip your face out of the gate, and I was wrong because Tuesday was actually down a little bit, Wednesday down, and then we just slid right into Friday. I think we might see a little bit of a follow through tomorrow, but I don't think we're getting back up to 2165 before the Fed meeting. So let me cancel it just so you can look at the metrics, and I might actually try and get a better price. Well, it's at $1 now. Here's the metrics. I teach my folks, you always look here first. The first place your eyes go is Mr. Sad Face. Max potential loss, and that's $5,900. Why? Because 99% of retail traders, this is the options house. I helped build options house, so all the full disclosure and all that stuff when I was at Peak 6, so I like it. The average retail trader looks at what first? Max potential profit. Hell yeah, I want to make $1,600 by Friday. Whiz, put me in this. Well, do you want to lose? You okay with losing that? No. Then why would you even look at the max profit first? So everybody on this webinar that's quoted professional always looks at max risk first. So if that ain't cool with you, either cut the contracts in half or don't do the trade or do whatever. But I have what I call SOP, standard operating procedures at Top Gun Options, just like the fighter squadron, where I don't want to risk more than 5% on any one trade. 5% of my model portfolio. The model portfolios are based on 100 grand. So there you go. It's a little north of that. I get it, but I'm the commanding officer and I can do whatever the hell I want because I signed the SOP. But higher probability trade, 68, 69-ish% probability. There's at least a 70% probability as I speak. Remember, this is at the money volatility. This isn't volatility on Friday of making some money. Now, danger Will Robinson on this trade. Everybody sit up in your chair if you're in the least bit interested in this. When it comes to trading the SPX options during expiration week, listen very carefully. This trade settles Friday morning at the opening bell at the first print when all 500 stocks print what their price is Friday morning. This trade expires. What's that mean? You have to. Well, you don't have to. You can do whatever the hell you want. I get out Thursday afternoon. I don't know how many times in my career I will raise my hand where I have not gotten out of this trade on a Thursday afternoon and gone, now I'm at the mercy of the overnight god. And last week was a perfect example because we had an iron condor on the SPX in our weekly options program, and Thursday was up $1,500 in 3 days since Labor Day, and I said, out, that's it, pigs get slaughtered. And what happened? The Thursday night gods came in and slaughtered a lot of people on Friday. So with this trade, remember, it's best to get out sometime on Thursday, then sit there and wait and just hope ain't a strategy, and hope that the gods are good to you overnight and that it expires and you make some money. So that's what I am personally looking at for my subscribers. All right, awesome guys, we are right on timeline. We got 8 minutes left. I'll tell you what, Lance, let's go around the room, and if you have any by the ways about what we talked about as far as the market, if you don't, let us know how we can get a hold of you, Lance, and look up and follow you and do what you do, since apparently you all work together and I never got invited. But we'll start with Lance.
Well, if anyone's in the Tampa area, feel free, come out, grab a cocktail. Andrew King, who actually runs Alpha Shark, the president, was actually in town this weekend, so we went out and got drinks. So always a fun time there. Basically, if anyone's interested, they can email me, lance@alphashark.com. Any questions, concerns, just market commentary, what's going on in the market. And also check out alphashark.com, where we do have a live trading room with, right now, just shy of 200 people online. We're literally for 8 hours a day. You'll watch us in the trading room trade, share screen, live chat, everything like that, even a pre-market show and a post-market show that I host, kind of wrap up what's going on in the trading day from stocks, futures, options, and earnings trades, with a little bit of volatility trades in there as well. I think that is it. Very fun show, and I can't believe everyone's finally a bull. Or most people, I should say. Finally a bull in the market, because usually I'm the standalone bull and have to fight through all the bears out there.
I'm a hold your nose bull, man. Like I said, one hand on the ejection seat, so I can be hanging in my parachute as everybody else is getting slaughtered. So, agreed. Okay, Jason, where can we track you down, man, and what you do?
You can go to smartmoneyinvestor.com, email me there, jason@smartmoneyinvestor.com. And I developed, I would say, what I call my Prime Picks trend following course, Master Trend Trader. And you all know about the turtles and catching the big moves, etc. What I'm looking for is that sweet part right in the middle, the sweet spot if you're into golfing, where you hit it just right. I want the charts that are not giving me any resistance, very shallow pullbacks, etc. And I'm teaching guys how to use it. It's just a simple system, but the awesome thing is it's applying to futures, it's applying to ETFs, currencies, even stocks. It's something I developed actually with futures and used to pyramid into some pretty stellar positions. So that's basically my main focus right now, is helping guys that want to simplify and yet still get chunks of the trend out of there. And, just email me. I'm always responding to emails, and like to keep it personal. Don't just sell a system and then walk away and you can't find me. I'm the man behind the curtain. It's more or less, I want to engage, build a relationship, and mentor people, help them to get to their trading success.
That's great, man. That is a great business model, and that's how you learn, folks. So make sure you check out Jason, what he does there. Anka, how about you?
If ever anyone wants to get a hold of me, they can find me at info@tradeoutloud.com. My website is tradeoutloud.com, and we also have a weekly swing trader newsletter that we are sending out every Sunday night. And also for all swing traders that are interested, we do have a YouTube channel. It's youtube.com/tradeoutloud, and you can find every Monday morning you're going to find my best picks for swing trades for this week. So it's a swing trading report with market analysis, and it's there for free. It's about 15 minutes, and we had pretty amazing calls. Last week we had STX long, and we had Facebook the week before, so beautiful money were made in these prior weeks. Check it out and see if you like it, and if you want to be educated on our proprietary system, you can email me at info@tradeoutloud.com. In fact, we do have an upcoming class on October 1st and 2nd. It's a 2-day class followed by some personal coaching and mentoring sessions for scanning for swing trading. So info@tradeoutloud.com. Thanks.
You bet, Anka, and we'll see you down here in West Palm Beach shortly. You can sit in the left lane like I do with your blinker on and do 20 miles an hour on I-95.
Awesome.
Everybody does that. It's quite enjoyable. Kurt, where can we track you down at T3, man?
Hey, yeah, you can shoot me an email, kurt@t3live.com. We also have, like I said, I focus mostly on Forex, and I have a newsletter service where, putting out trade ideas, updates as far as economic news goes, etc. So you can get a 2-week trial to that if you want to shoot me an email. Again, kurt@t3live.com. We can get you set up with that. Or if you're just interested in trading the markets in general, go to t3live.com and see what we're all about. We got trading rooms, options, swing letters, etc. So a little something for everybody.
Awesome, Kurt. Thanks for coming, my friend. And if you're interested in learning about what we do at Top Gun Options, obviously you can go to topgunoptions.com. That would be kind of stupid if that wasn't the website. But topgunoptions.com, and we have a program that we have that's going on right now where we actually have 8 weeks of some academic training going on, or 8 sessions, not 8 weeks, I'm sorry. You can head to go.topgunoptions.com/FT now. And that stands for full throttle now. And you can, if you like trading weekly options, you can do that in this what we call track. If you like weekly options are crack pipes, man, no thanks. More kind of retirement focused. We call it the defensive track, and you can trade our accelerated retirement service and at Max Afterburner. We have folks who actually want to do both, obviously, trade kind of retirement portfolio, trading those leaps, being long-term bullish out the 2018 on China, Brazil, JP Morgan, whatever it is. And then obviously weekly options are what I just showed you, trading tactically, putting trades on Monday, getting out of them Monday afternoon if they make enough money, or holding them till Friday. And then the Max Afterburner is all of the trading services that we have here at Top Gun Options. So that's how you can get a hold of us. Go.topgunoptions.com/FT-now. That stands for full throttle -now. Or you can give us a call at 754-300-1084. Just like the other folks here, we'd like to be hands-on. That's the only way you fly an airplane, folks, or get instruction on how to fly an airplane is some personal training. So I think we nailed it with 1 minute left to go. Look at that, David. That is called flawless execution, my friend. So I'm going to turn it back over to you and get out of the way. Thanks for having me, Skipper. I appreciate it.
Great, yeah. Thanks, guys. Great show, everyone. And just want to remind everyone who's watching that you can go to TimingResearch.com and download any of the past reports there, or watch any of the past shows, including this one, will be on the main page in a few minutes. Also, Google is moving the Hangouts on Air platform from Google Plus to YouTube Live after today, actually. So if you're watching on a Google Plus page, if you're used to that, you'll probably be watching on a YouTube page in the future. So I want to make sure you're aware of that. Also, join us next week. Andrew Keene, who Lance mentioned a couple times, will be on next week, as well as Adam Johnson, Gary Dean, Neil Batho, and Dean Jenkins will be on as moderator for the first time. So I want to thank all my guests for this week. Lance Ippolito of alphashark.com, Jason Pearce of smartmoneyinvestor.com, Anka Metcalf of tradeoutloud.com, Kurt Capra of t3live.com, and of course Matt Buckley of Gun Options. Thank you for hosting again. Thanks, everyone.
You bet. Thanks, man.
Thank you.
See ya.